So investment banking versus cryptocurrencies. So I'm in crypto since 2016, and John is now more on Udemy, but before he had a long career in this sector. So that's why we're doing. It's general, it's for everyone, and everyone can understand. So first, investment banking is a bridge between large enterprise and investors, meaning only large enterprise can access to investment banking. And so it's not for everyone, and also not all the people know that it exists. And maybe it's done for this, but we will see in the next subject. So first, what kind for you, John? What kind of institutional investors are contacting this investment banking? What kind of customers?
I think you've got to look at the different departments in the investment bank, because and if we take the sort of bulge bracket firms like Goldman Sachs, JP Morgan, people like that, they will have on their trading floor groups of people who trade in different types of financial assets, securities, that sort of thing. So, at one extreme, they have the equity trading floor, but they'll also have the bond trading floor. They'll have the mortgage trading floor. They'll have different groups of securities handled, and part of their function will be origination. So they will be creating these securities in order to issue them. Now, in terms of the scale, the numbers, if you talk about Eurobonds or something like that, I mean, the numbers are very, very large indeed. And so they're really focusing at the large institutional funds, pension funds around the world, and they're very big numbers. If you take this down a level and go into the advisory side, then if you talk about Goldman's, they're probably not going to take on a client unless it's in the hundreds of millions. They are not. They're very much at the large end transaction size, and they very much focus on that. But if you go to other investment banks, you go to boutique investment firms like 2i ran, then your client base can be very much smaller. You can be dealing with startup companies raising money even from angel investors. So the scale is across the platform. Now, what is happening in terms of the different types of securities that are originated and traded by these investment banks is to a certain extent a black box, because it's unless you actually go in and look for their issuance documents and work through their issuance documents, which can be an inch thick, then it's very difficult to understand exactly what they're trading. So if you go back to the 2008 crisis, when they were creating collateralized debt obligations, which is basically a bunch of mortgages piled up high. And when I say a bunch, I'm talking thousands of mortgages piled up high. Collateralizing means bringing together debt obligations. A mortgage is a debt obligation. I owe money in payment against the financing on my house. Those were being traded in huge numbers, but with all the information was there. But when you have one CDO and it has, say, 100,000 mortgages in it, who and how do you go about checking the quality or the internal composition of those mortgages? And if you're a trader on a dealing floor somewhere, if you stop to try to analyze every single bond you ever deal in, you might deal in one bond a year, and you probably wouldn't have a job for very long. So there's a real issue there when it comes to then things like crypto. Let's just be clear about my career. I joined an investment bank in 1988. I set up my own firm in 2001. So I worked in mainstream banks for, 14 years, 13, 14 years. And then I was doing my own advisory work. And this is a long time before, crypto ever came on the scene. So I've never worked in an investment bank in a crypto or been exposed to crypto currency or to the blockchain. But I think you have to assume that the banks, if the bulge bracket banks could work out a way of making money out of crypto, they'll do it. It's already clear that there are quite a number of funds and high net worth individuals who are publicly and actively investors in various crypto. The obvious example are the Winklevoss twins, who are big investors in Bitcoin. And this conversation is not just about Bitcoin. Mm-hmm. So it is there is a lot of speculation going on. And the banks are certainly, I think, probably more threatened and yet more stimulated by the opportunity for blockchain technology and this is decentralized finance, but creating their own blockchains so that they have control of the decentralized finance. So if you like, it's decentralized finance without decentralizing it, because you still have a control element in the middle. And this is the big challenge, isn't it? It's how can the banks still continue to make money from something which is fundamentally designed to take them out of the equation?
Yeah. Okay. So for this is really a big difference with crypto, because crypto, even decentralized finance, we will see after, it's for everyone regarding your money. You have everyone, but at the moment, we don't have anything like investment banking services for big investors, pension fund. Everything is nothing in crypto. It's nothing. So it's not ready. Will it be? I don't know. But in kind of scaling, it's not possible at the moment, because if so many big investors come into the market, then the price will explode. Or when they sell, it will fall down. So it's not possible at the moment. There is some private trading desk, is existing, but it's not big enough. So this is just a fact. So we can say, okay, maybe, but at the moment it's not ready. You talk about the black box, and when I hear this, the first thing is coming to me is Goldman Sachs. It's called the firm, but that's it. And the public, a lot of people that don't even know what is it, Goldman Sachs, you can ask all the people there. It's the firm, and that's it. Is it made to be on purpose that no one knows what is investment banking, or is it just like this and no one cares, or just?
I think with the bulge bracket firms, you have to understand that they are very complex financial organizations. They cover a very wide range of both advisory and trading activities. Of course, they don't want to, other than their obligations to disclose what they have to the regulators, they don't want to tell all their competitors their secrets. So there's a lot of commercially sensitive information inside of these firms, which quite rightly remains proprietary and remains hidden. If you go to a hedge fund, is the hedge fund going to give you their trading algorithms? No, of course they're not. Are they going to tell you how they choose stocks in the market and how they run their books against the market? Of course they're not, because as soon as that information is public, then their competitors can trade against them.
So do you like what you are seeing? Then you can continue inside our Udemy course. You have the link here. You will see in the next section, advice business, asset management, the dark side of investment banking and crypto. This is exclusive content, high quality one, and the future of investment banking and cryptocurrency. You have a lot of things inside the course, also basic of cryptos and blockchain. So now you have to take action. I will see you and John inside the course.